It's Monday, September 12th, 2022. Markets just closed up a little while ago. Dow Jones up 229, NASDAQ up 154, and the 10-year bond yield, 3.36%. So we got to keep an eye on that debt market, keep an eye on that bond market, watching the 30-year bond yield creep back up. And it looks like it wants to get back up to 3.5%. Not going to be good news if you're looking to take out a mortgage. But again, markets up today based on what? Do the markets believe now that we're going to get some good news regarding the CPI? I believe we get the CPI numbers tomorrow, if I'm correct. And I believe that we're going to see an improvement. So what does that really mean? If we see CPI come in around 8%, 7.9%, it's still a big problem. Is the Fed ever going to get inflation back down to 2%? It's not going to happen this year. It's not going to happen next year. And in the meantime, people's wages are going to continue to be decimated, whether we have CPI at 7.9%, 8%, 8.5%, 9%. It doesn't really matter because it's not anywhere near 2%. People's wages are not going to keep up with inflation, even if it's improving. And this is going to be a problem for most people, but I think the markets are looking at this as good news, but it's really meaningless. It really is, because the average person, this is not going to help the average person. And just going through some of these articles today, U.S. national debt nears $31 trillion and counting. No talk of that today on any of these financial channels. How about this one? Goldman Sachs to kick off Wall Street layoff season with hundreds of job cuts this month. They're reining in expenses amid a collapse in deals volume. Nobody really talking about that today. Markets just go up based on a bunch of nothing. Markets pricing in that the CPI is going to be better than 8.5%. Unbelievable. And one way they're doing this is by pushing down gasoline prices. I think that that's going to really be the culprit here of why they're going to get the CPI down. And we'll talk about how they're getting gasoline prices down in just a minute. Inflation now causing financial pain for most Americans, survey shows. This article coming from Fox Business, 56% said they are feeling the sting of price increases. 12% describe the pain as severe. 44% called it moderate. Households who make less than $48,000 a year say the steeper inflation is jeopardizing their standard of living compared to 12% of middle-class Americans. I think that this article is being I think it's being a little conservative, because I think a lot more people in the middle class are suffering. I think a lot more people than people just making less than $48,000 are suffering. 56% said that they're feeling the sting of price increases. I think a lot more than 56% of this nation is feeling the sting. The Hedge today, alarm bell sound as world's second largest appliance company reports demand plunge. Electrolux, the world's second biggest home appliance manufacturer after Whirlpool, said that the market demand for core appliances in Europe and the U.S. so far in the third quarter is estimated to have decreased at significantly accelerated pace compared to second quarter. Not a good sign for the housing market, not a good sign for the economy either. Another one on the Hedge. Average U.S. credit card rate hits highest on record. Get this, the average credit card rate now is 18.03%. And this is a concerning bit of news here, because we have so many people now dependent, reliant on the use of credit cards to pay for essentials such as rent, groceries, gasoline, paying their electric bills. And as we've said last week, 20 million people or 20 million households in the U.S., 20 million households in the U.S., that's 1 out of every 6 households, cannot pay their utility bills right now. Yet markets are up today. They're telling us to go out and buy a house, jump into these markets, go out and shop, use your credit card, spend money you don't even have. Everything's going to be okay. CNN had an article, actually an interview with Treasury Secretary Janet Yellen. And she warns that gas prices could spike again this winter. She said that the European Union is severely cutting back on Russian oil, and this will most likely stop buying from Moscow. This could cause a spike in oil prices. Let me know what you think about that. Oil was up a little bit today. Are we going to see prices at the pump begin to increase? I believe in a couple months we're going to. And why I believe that is so is because of this next article on the hedge. The administration withdraws record amount of crude from strategic midterm reserve. Last week, we saw almost 8.54 million barrels withdrawn from the strategic petroleum reserve. This is the biggest weekly withdrawal in history. And just getting back to what I started this video with and why we're seeing lower gas prices, and this is my opinion. Please let me know what you think about this. Comment down below. But this, to me, I think is how they're getting gas prices, how they're lowering gas prices at the pump. And in short term, this is going to work. But in the long term, this is going to be extremely, extremely expensive. And I think we're going to pay a big cost here. And on top of that, we are really taking a risk here just with our security, because those reserves are for emergency. They're for a war. And why we're tapping into them? Well, I think that we're tapping into them to obviously lower the inflation number. But if you really want to lower inflation, start fracking and start drilling. We have so much energy here in this country, and we're not tapping into it. And if you really wanted to attack inflation, we would be drilling and fracking right now, and we would be smashing these energy prices back down, and we could be selling energy all over the world. We could be putting tens, if not hundreds of thousands of people back to work, and we could be tapping into our resources and being energy independent instead of being energy dependent. Let me know your thoughts on that. But to replenish what we're using in our strategic petroleum reserves, this is going to be extremely costly. And we are using them now with oil prices very, very high. And when we replenished them last time, oil prices were very, very low. Now, to replenish them this time around, we're going to be paying $5 a gallon. That's what we're paying right now. Imagine what it's going to cost to replenish these reserves now. Again, when we replenished them years ago, oil was much less expensive. It is much more expensive now. It's going to be at least probably twice as more expensive to replenish these reserves. Online prices in August rise as food and apparel lead gains. This was on Fox Business today. The Adobe Digital Index shows the prices for groceries, online groceries, surged 14.1% compared with a year ago. The cost of groceries has risen now for 31 straight months. Apparel rose 4.9% year over year and jumped 8.7% from July. So that's some of the latest economic data today. I want to ask all of you, what do you think is going on with the markets? Everything seems to be back to normal. Markets are going up, but we're watching that 10-year bond yield creep back up, and that to me becomes very, very dangerous. And we're looking now at the price to use credit cards, the price to borrow money. What does this mean for small businesses, big businesses? They're going to have to spend more to borrow money, and this is, I think, going to really slow down the economy. This is where we begin to see a liquidity crisis as they're raising rates to borrow money, anything from a credit card to a personal loan to a business loan to a mortgage to a car loan, etc. And that credit card at 18.03%. This is legal loan sharking, isn't it? And remember, when the banks were literally borrowing money for next to nothing and they were charging you, 15, 16, 28%, wasn't that nice that they passed on the savings to you? It's just, again, this legal loan sharking that is taking place, and now people are in a real predicament here where they have to use credit cards. And I think that this is going to continue to get very, very ugly, ladies and gentlemen. And I don't care what the markets do at this point. To me, it's very alarming watching the markets go up with all this bad data. And then we look at what's happening in housing and the amount of inventory. I was watching a video today, and they're saying that we now have 10.9 months of home inventory on the market. This is higher than what we had before the '08 crisis. So again, that's another red flag, another indicator that something is very, very wrong here. So bond rates going up, home inventory going up, interest rates going up, Fed's fund rate going up, the cost of living going up, and inflation not really going to go down. When we get the CPI, let me know, where's it going to come in? I think it will come in below 8.5%. I think it's going to come in around 7.9 to about 8. And that's going to be great news. All the analysts and economists are going to cheerlead it and clap and pump it up, and the market's going to love it. But in all reality, you're still absolutely getting decimated. Your savings, your paycheck, your wages, your purchasing power will continue to be decimated. And we're going to see the Fed raised 75 basis points, in my opinion, on the 21st, and they're going to continue to raise rates, ladies and gentlemen. I don't see how they're going to get inflation down anytime soon to 2%. And are we going to just get used to inflation? At some point, are they just going to say, hey, it's going to be 4.5%, 5%, and you're just going to have to get used to it? Imagine what that is going to do to the middle class and to the poor in this country. And I truly do believe even the wealthy in this country are going to take some very, very big hits. Again, to borrow money, the cost to borrow money now is going up. And we're going to see this liquidity crisis continue to be a problem in this economy, an economy where we really don't produce or manufacture very much, an economy where we're very dependent on cheap goods and products coming from other countries. And now those products are not going to be so cheap with inflation. And the average American is not prepared for what is coming. And I've talked about this for years. Many of you have talked about this for years. And this is why we've been preparing. People are not prepared right now for what is going to happen. We are going to watch these markets implode. We're going to watch housing implode. We're going to watch the economy continue to implode. We are witnessing an economic collapse take place right now. It's been taking place for over a year, easily. Nothing got fixed from the '08 crisis. This thing's been limping along, and now there's going to be a big price to pay for the low interest rates, all the money printing, and all the manipulation. There's a huge price to pay. And unfortunately, it's going to be mainly the middle class and the poor and the economy, which has been sacrificed for the stock market. But the stock market's going to pay a price here too, because the housing market is going to collapse, and it will collapse the stock market. This economy is collapsing every day. We're getting further and further into a depression, and this is going to also have an impact on the markets. They are continuing to do whatever they can to keep these markets propped up and manipulated. They're on borrowed time, ladies and gentlemen, and you need to be protecting yourselves mentally, physically, spiritually, and financially. So it's a very, very humid day here out in the desert. We just had a little drizzle earlier, so I'm going to wrap it up. I could probably go on for another hour and just rant with everything that's taking place. But when I watch these markets today and how they trigger these algorithms or whatever they're doing on the hope that the CPI comes in good or better than expected, it's not really going to make any difference. People are still not making more money than the cost of inflation. Their wages are not keeping up. Their savings are going to continue to be drained. And it's going to be a big, big problem for most people in America. And it's going to be a big problem for anybody that needs to borrow money, a small business, anybody trying to open a business, anybody that's going out to purchase a car, a home. This is going to be much more costly. And this is, to me, is going to really begin to really strangle this economy as we begin to see this liquidity pulled out of it, money being pulled out of it, and the cost to finance anything skyrocketing. So it's going to really slow things down. So get ready. And we know that that's going to cause discounts and big sales. So get ready. Keep an eye on things. Big discounts are coming. Sales are coming. Keep your powder dry. Stay on course. Keep stacking cash. Stack as much capital as you can, put away the assets, and of course, put away all essential preparations that you need in case the lights went off for a day, 2 days, a week, or a month. If the system went down, you need to be prepared. Make sure you have access to your assets and to your cash when you need it, okay? Don't leave it all sitting in a bank, all sitting in a safety deposit box. You do not want third-party risk with what we're heading into. If all your money is sitting on one of these, you're going to be in big trouble and you're going to regret it. So make sure you act as your own central bank. Stay safe out there. God bless you all. I look forward to speaking with all of you very, very soon. Have an incredible day.